We are live from Bloomberg's world headquarters in New York City. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, Mike Novogratz sounds off on Sam Bankman-Fried and Barry Silbert. Details on the war of words erupting amongst the crypto titans.
And amid the ongoing drama, are institutional investors shying away from digital assets? We'll survey the landscape with Drew Forman, head of Cowen Digital.
Plus, one urgent question keeps resurfacing. Who should regulate the crypto industry? CFTC Commissioner Pham joins us in studio in just a few moments.
Really looking forward to all that's to come ahead. But first, let's quickly get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what we will see is that Bitcoin is higher for a 14th day in a row, potentially capping its longest winning streak going all the way back to the fall of 2013. So big move in the larger scheme of things, even though it's only up about 0.5% today, above $21,000. Ether, though, unchanged on the day. We are just shy of 1,600. Where you're seeing the bigger moves really is in those crypto-related equities. Coinbase, for example, on a 6-day winning streak, up about 6% today, and Bit Digital up 10% today. Already, this stock has more than doubled so far in 2023, and it's only, January 17th, Matt? So really remarkable run for a name like that one.
Well, we're seeing a massive run for crypto miners. If you take a look at the MVIS Global Digital Assets Mining Index, it's risen more than 70% in the month of January. That, of course, comes alongside a rebound in the price of Bitcoin. It's up about 30% itself, so less than half of what the miners are up. The reason is really the gain in the margin that miners can make. Right now, it's estimated that miners can make 21% more on Bitcoin than they could before this recent run. Kaylee?
All right, Matt. Well, all of this upward momentum is injecting some optimism into a market that has been struggling to find good news, but there's still some beef brewing among the crypto titans. Bloomberg's Sonali Basak is joining us now with more on that. Sonali, you wrote a great profile of Mike Novogratz of Galaxy Digital last week, and the quote is essentially that he would like to punch both Sam Bankman-Fried and Barry Silbert in the jaw.
That is certainly what happened. The rest of the quote was along the lines of how his daughter wouldn't approve of something like that anymore. It's toxic masculinity baked in.
He doesn't seem like a violent person at all.
You know, it's the wrestling vibe you get from Mike Novogratz. He said he's gearing up to fight again. And the thing that's interesting about Mike Novogratz in this era is obviously there were a lot of things overhanging the crypto industry. You had the FTX fallout. You had 3AC and the Luna debacle. You have the broader macro story, which he attributes to a lot of the reasons that crypto is still limping through when you look at today. He gives a timeline on how long it will take for Galaxy to work itself through this kind of a situation, and he's made tough decisions himself in terms of reorganizing Galaxy to meet this new market opportunity, but more than ever, he's trying to emerge here as a face of this industry. Really have a lot of faith still in Bitcoin and the story behind it.
That's the bottom line, right?
Yep.
He is counting on a comeback. He's not cutting his losses and running. He's here to stay, and he is optimistic still about the future of digital assets.
He is, and I think something interesting is the culture shift you're seeing, not just at Galaxy, but in the industry more largely. Mike Novogratz, even on this program, has said the institutions are really best poised to win. That's the Fidelities, it's the Goldman Sachses. Remember, Mike himself has set up his office pretty much a stone's throw away from Goldman Sachs itself. Lots of trading desks still waiting to expand into as he buys assets out of bankruptcy from different players here. But when you look at that institutionalization, you wonder what kind of talent that starts to nurture and create in the industry. A lot of people have left a lot of jobs in crypto. Again, Galaxy is one that cut about 14% of its headcount before they started to buy all these new assets and kind of focus on the institutions here. What does the future look like is yet to be drawn out because we're still limping through a lot of these troubles.
All right, Sonali Basak, thanks very much. Great reporting. Highly recommend everyone checks out your story on the Bloomberg terminal or on the website Bloomberg.com. Now, despite all the finger pointing and uncertainty hanging over the industry, there's still a lot of interest from institutional investors in digital assets. That's according to Drew Forman. He is head of Cowen Digital, and he joins us to talk about it now. Drew, we've had this bounce back in Bitcoin up to over 21,000 from the 16,000 level it held at after FTX. We're now back at kind of pre-FTX levels. Are institutional investors part of what's holding the price steady and moving it higher?
Absolutely. I think 2023 is going to be the year that you're going to see the largest institutions come into the space. And that really wasn't the case in the previous bull markets. We are having conversations with some of the largest asset managers and hedge funds that Cowen speaks to on a daily basis in other asset classes, and they are all building and continuing to build even through the last quarter of last year, the infrastructure to be able to deploy assets in the space. And I think the next leg up will really be institutional led.
How are you thinking about the competitive landscape between traditional financial players expanding into crypto versus crypto native institutions? Has that dynamic shifted given the implosion of so many different players in the crypto native sphere we have seen?
The infrastructure is certainly nascent, and I think what you'll see in the coming years is that the traditional finance organizations will really lean into the space. I think what our customers are asking for is an infrastructure really built for the institutional mindset. Right now, if you look at the landscape, a lot of the solutions are retail based, and they've sort of added on an institutional only solution. What we're seeing now is that the traditional finance players, those trading, trillions of dollars of equities and bonds and credit, are looking for that same type of white glove service for equities like workflow to exist in the infrastructure in crypto. And I think that's becoming the case with institutions like Cowen Digital.
Well, something we're seeing in both the traditional financial sphere as well as in crypto, and Shanali was just talking about this with Galaxy Digital, is layoffs and cost cutting and kind of thinking differently about growth going forward. What are you doing at Cowen Digital with your headcount, for example?
So we're building, we continue to hire. We just hired ahead of our European operations, Taylor in London. But we're building methodically. I think bull markets are very forgiving, and you saw a lot of companies overhire. You see a lot of press releases where companies are saying we're going to hire 100 people for our digital asset units. That's not what we're doing. So we're building methodically. We continue to want to hire. I think, unfortunately, there's a lot of amazing talent out there that went from traditional finance to digital assets, and some crypto natives have some very smart developers and salespeople, and it's a really great environment to be hiring and building, and that's what we're doing.
We are always focused on regulation. There are always open questions there. We're about to talk to CFTC Commissioner Pham. What's one question you would have for her or for regulators in general in digital assets?
I think we welcome regulation, and I guess my question would be to ask for clarity, to ask for, which regulatory body should we be looking to going forward. We have discussions with, obviously, Cowen, the SEC, and FINRA for our equities units, and all of the different states and international entities for our digital asset unit. And I think regulation is something that's welcome, and regulation will bring more confidence to the space. So I think the more front-footed that institutions can be, as well as the regulators in discussions with institutions, I think it'll bring a lot to the space. Does
it have to be one body? I mean, it strikes me that, in modern day banking, there are a number of regulatory bodies with whom you have to communicate and work. Can it be the same in digital assets? Can't the CFTC and the SEC both regulate crypto together?
Yeah, absolutely. I think any framework with a number of regulatory bodies would really increase adoption in the space. And, we look forward to working with all of the regulators.
Well, a question we have continually asked over the last several months, Drew, is whether or not regulation would have entirely prevented an episode like the implosion of FTX from happening if it was just a bad actor acting badly, even within existing regulation. And on that note, it also raises the question of custody of these digital assets and whether everything should just live in an exchange or you personally should have control over it. How are you thinking about the custodian, the role custodians play moving forward, and how does that fit into what you're doing at Cowen?
It's always been our belief from the beginning that markets functions, so trading, lending, shorting, as well as derivatives, should be separated from the custody of assets. I think you see this in the asset classes of equities and fixed income. If you look at the exchange model right now in crypto, I think they're doing too much. If you went to a $1 trillion asset manager in equities and said, you're going to custody your fiat at the New York Stock Exchange, you're going to trade on the New York Stock Exchange app, with the New York Stock Exchange, and then you're going to custody your stocks on the New York Stock Exchange, that workflow would be unacceptable. And I think we're gravitating towards a model where segregated, regulated custody, as well as trading functions will be separated, and you'll see a number of institutional players in the space to fill in those needs.
All right, Drew, thanks very much. Drew Forman there, head of Cowen Digital, talking to us about what he hopes to see in terms of regulation. We're going to get more on that when we come back. As I said, CFTC Commissioner Pham joins us here in the studio.
Plus, we'll also get the view from Davos, including from Harvard professor Ken Rogoff, who earlier today said he remains cautious on crypto.
It's going to need to be regulated a lot. I favor, strong regulation, but that can't be done by one country. If it's still legal in Russia, you can still own it here and potentially spend it. Maybe Russia wasn't the best example, but it's going to probably remain legal in a number of countries where the government doesn't completely control the country. So that's going to give it value.
At the moment, the crypto market in the U.S. is almost exclusively a crypto commodity market. All of us, because there's a lack of regulatory clarity around the securities side, have built our markets around crypto commodities. And I think Congress will step up and provide legislative authority for the CFTC to regulate those at the national level.
That was Faryar Shirzad, Chief Policy Officer at Coinbase, discussing the crypto regulatory debate with Bloomberg at the World Economic Forum in Davos. And joining us now to add her voice into this conversation is CFTC Commissioner Pham, who is here with us in our New York studio. Caroline, great to see you. He was talking about a certain degree of confidence that Congress will finally set the rules of the road and that a lot of power will be given to the CFTC. What is your degree of confidence that that's going to happen and happen anytime soon? Because we've been waiting a while.
Well, first of all, thank you so much for having me here. It's great to be back on Bloomberg. And I have to say, I think there's many others who make a living predicting what will happen in Washington, so maybe I'll leave that to the experts. But I know that—
Are you having conversations with Congress about this?
That's really the prerogative of the chairman. But for me, I'm here to do a job, and I'm focused on making sure that we're using all of our existing authorities to do what we can now. And I've been saying that since last May.
When you look at the FTX debacle, Kayleigh was just asking, could it have been prevented by regulation, especially considering the fact that they were in the Bahamas and they weren't dealing, for the most part, with U.S. consumers? What's your view?
So this is the question, right? I mean, Commissioner Hester Peirce and I, SEC Commissioner Peirce and I, called for these public roundtables back in May and June to examine what happened with the crypto crash last summer. And so I have to ask the question, if we had had that kind of public inquiry, could we have uncovered some of this interconnectedness and some of these risks that have built up? That's also why I went right to work with my proposals for the first ever 10 fundamentals for responsible digital asset markets, first ever Office of the Retail Advocate, and really going out there and talking to international policymakers on what kinds of standards can we have at a global level? How do we close gaps? I've had over 75 meetings, and there's a very advanced discussion happening outside the United States about this.
So what have you gathered from those meetings? How does the industry look right now when you read about the fight between the Winklevi and Barry Silbert, Genesis and Gemini? You have to be concerned.
I have to say that it is a concern, right? And this is exactly what all regulators should be thinking about. How do we use the existing authorities to provide the clarity that's needed now to identify what's a crypto financial instrument, which I think should be held to the same standards as other financial instruments? What is a crypto non-financial activity, and what are the appropriate regulatory and legal frameworks that apply to that? And what is just something more about the blockchain technology and the use cases for that, which I've taken a very hands-on approach to understanding.
Well, you keep talking about these existing regulatory authorities that you already have, that you don't need granted to you. Have you fully utilized those, or are there levers that the CFTC has yet to pull?
I think we always have to be thinking about what more we can do and not just be satisfied with maintaining the status quo. And so what I'd like to do is see the CFTC and other regulators provide more guidance this year. I'm very hopeful that perhaps we will see more clarity in the United States that way, pursuant to the president's executive order and some of the reports that came out there. And that's also why, through my Global Markets Advisory Committee and my international engagement, I hope that we can build upon my 10 fundamentals for responsible digital asset markets and create some industry standards and best practices that people can start to do today and not wait any longer.
There is a school of thought among the crypto skeptics, if you will. We've spoken to some of them on this program who essentially say you should just let crypto burn, that you should not grant it legitimacy by giving it regulatory clarity and by setting guardrails. What would your response be to an argument like that?
So this is a really important point. You know, back in May, I actually said that these junk tokens really are more like lottery tickets, and that's how people should be thinking of them. They're not investments. So that's why it's important to distinguish what is a crypto financial instrument. So in the world of crypto assets, right, there are some that are very clearly banking and payment products, and those should be subject to oversight by the banking regulators and to those regulatory frameworks. There are definitely some that are being used for capital raising. Those are securities. That's going to be under the oversight of the SEC and other capital markets regulators around the world. There's a whole lot of them that look like derivatives, including in a recent action that the CFTC just took, an enforcement action against some activity that's happening, market manipulation and fraud on a decentralized digital asset exchange. So the ones that are derivatives, we have a clear regulatory framework for that. That was brought about by Dodd-Frank in dealing with the financial crisis and those reforms. Then when you think about that pie all being divided up, then there's the crypto non-financial activities. And I think this is where there's some really interesting discussions to be had. And these are the kind of discussions I'm having around the world on NFTs, on Web3, on utility tokens. We don't have a definition for utility tokens in the United States. And then that's separate and apart from the use of blockchain technology to modernize the financial system. And there's very advanced experiments and pilots happening around the world by central banks, big banks, and other really looking at the infrastructure of the financial system. How do we make it more efficient? How do we make it more cost effective?
It does seem like the U.S. is falling behind other nations. China is very out front in terms of digital currencies. The ECB has used the blockchain to issue bonds. Canada has Bitcoin ETFs, spot ETFs. How can the U.S. regain leadership? Do you work with those other players, or do you toe your own road here?
Yeah. I believe in American innovation and leadership, and I absolutely agree that the United States cannot fall behind the rest of the world or fall even more behind the rest of the world. And what we keep hearing from market participants is it is that lack of regulatory clarity in the United States that has been a challenge. And so I think first and foremost, we need to ensure that crypto asset activity is brought within the regulatory perimeter. We have the strong guardrails and protections for the public. But then we have to think about how do we use these innovations, as you just mentioned, tokenizing securities markets and having those are all subject in the EU to their requirements under MiFID and so on and so forth. How do we look at that? How do we look at these DeFi protocols that central banks are experimenting with around the FX markets and bringing efficiencies there? That's the kind of thing that I hope that we'll focus on in the United States.
You mentioned Commissioner Person at the CFTC, of course, with you. Gary Gensler has been really the focus, I think, for the industry. Do you work together with the SEC? Do you have a good relationship with them?
Yes, the agencies have a really long history of working together ever since the CFTC was founded, and even the CFTC's predecessor agencies. There have been other areas where there has been questions of drawing boundaries and lines between our different jurisdictions over certain products that have mixed characteristics. So from security futures to, of course, derivatives, again, after Dodd-Frank and the reforms, and then, you know, other things around mixed swaps, for example. So there is that long history and tradition. And in particular, we bring many parallel enforcement actions. And that's a really important part of our job as well.
Finally, just on the subject of working together, we know for some time, up until recently, Sam Bankman-Fried also was, if not working directly with, having a lot of conversations with the CFTC and pushing in Washington for the CFTC to have more control over regulating this industry. Who fills that void? Who are you talking with most vocally now?
You know, I think, and this kind of harks back to some of the conversations and other guests that you've had on the show, but what people are looking at, traditional financial institutions and institutional investors, they're looking at how do we use this technology to modernize and upgrade our current market infrastructure. There are benefits that need to be explored from blockchain technology, which again have nothing to do with junk tokens, and that are done by regulated firms with financial resources, risk management, and so on and so forth. So I think that's where the conversation is with the rest of the world, with that regulated sector, and I think that's the conversation that we need to continue having.
All right, well, thank you for being here and having a conversation with us in our studios in New York. Caroline Pham, CFTC Commissioner, we really appreciate your time. And for more crypto conversation, make sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and people shaping the ever-evolving digital landscape. Look for that every weekday wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Caitlin Limes with Matt Miller. And now to some crypto stories that caught our attention this week. Crypto is making a comeback, or at least in one corner of the market. Funds focused on digital assets are beating every other ETF so far in 2023. In fact, the top 14 performing ETFs so far this year are all tied to crypto. Many of these funds were also among 2022's biggest losers. How quickly things seem to have changed, Matt.
Absolutely. Silvergate Capital has reported a $1 billion loss. That's for a quarter that saw a dramatic drawdown in deposits after the collapse of Sam Bankman-Fried's FTX. The bank said the losses stemmed mainly from asset sales it was forced to make following the unraveling of the crypto exchange. Silvergate said it is eliminating a portion of its digital asset product portfolio.
And OSL is cutting headcount. The digital assets platform backed by Fidelity said it's slashing costs by about a third in response to current market conditions. OSL joins a string of other crypto firms that are tightening their belts. We know that includes the likes of Coinbase, the likes of Galaxy Digital, Matt, which Sonali was just talking about, the cuts Mike Novogratz has had to make. It was interesting, though, earlier on in this show to talk to Drew Forman of Cowen, saying they're still growing.
Yeah, they're still growing, and I think, this volatility is going to prove very difficult, especially for small or the medium-sized businesses that hired as many people as they could in 2021 and then have had to reduce their headcount in 2022. Now, all of a sudden, you have the prices coming back up and trading activity jumping as well. We saw that miners have done so well in terms of stock performance. You got to wonder if these firms are going to have to turn around and try and hire people again.
Yeah, and how difficult that may not be, especially if it's some people who may have escaped traditional finance to come over to crypto, got burned by that. Are they going to want to take a risk?
Once bitten, twice shy.
Exactly. So that's definitely going to be something interesting to follow. Just on the subject of prices, can we talk about a 14-day winning streak for Bitcoin? After we have had such little movement and volatility for so long, it feels like we've finally gotten that real breakout into the upside.
And we're back above the level where we were before the collapse of FTX. So back over $21,000. I think the November 5th price or November 6th was about $21,355, and then it all came crashing down. So, there's a little bit of light at the end of the tunnel here.
All right, we've made some kind of round trip. That wraps it up for us this week. But coming up next week, we'll be speaking with Ava Labs President John Wu and Bill Wolf, the CEO of Archblock, the company that created a blockchain credit lending marketplace, TrueFi. This is Bloomberg.